Dr. Bhatt, people ask me that, 52-week high, 52-week low has been crossed now, how we can buy? Or how, what is the reason we should not be buying? We should be selling more at 52-week high and, buying at 52-week low. This is what, normal thinking of investors and traders is, right? Buying at 52-week low and selling at 52-week high. As far as markets are concerned, in a sideways markets, this all things look very good, and you will be able to do those things. So, but is it possible every time to make money by doing 52-week high low? The answer is no.
Sir, sorry to interrupt. Many people are waiting in the waiting room, waiting to be admitted.
Acha, 1 second. Yeah, I think now they have got admitted. So nice. So, I think, yeah, Prachi has joined. Yeah, I think everybody is there. Ritesh? Yeah, I think
Yes, sir. Yes, sir.
so nice to see. I think Shantilal Gosar also I can see. Very good. So 52 high low is a theory which people ask, what to do. Buying at 52 high is not conducive to us. We sell. We are used to selling at 52 high. Sideways market, this is a very good structure, which you can follow easily, as a layman also you can follow. Because in sideways market stays in a boundary, in a range. And that boundary is well defined. And वो 52 के अंदर high low के अंदर आ जाता है, you get a basic selling point and basic buying point. But what happens when the market is trending? Either upward trend or a downward trend. If the market is trending, then this theory will not be giving you the same results or desired results. And as a result of this theory, you might actually lose out on making the big gains. Okay. Now, how? I'll explain to you. For example, I'll just be showing you a small thing. A stock has fallen, let us say, from 500. Okay, it has fallen to, let us say, 200. It is quite possible in market. Sometimes the fall are so severe, and all of you are aware of what has happened to various groups. So that is quite a possibility. And then it starts moving in a small range. Let us say between this is 200 on the lower side and 300 on the higher side, or let us say 280 on the higher side. This is the range it moves in. Okay, stock continues to move in such a range, it's a range like this. It's moving in a range. So what happens is when you sell here at 52-week high and you buy here near 52-week low, you are bound to make money over a period of time. But that rate of returns will be what? 15%, 10, 15%, 20%. That is the kind of returns you will be making. Okay. But supposing when the trending move starts, like now, it goes above this 52-week high. Are you able to see my screen, Dr. Bhatt? Ritesh screen, are you able to see the screen?
Yes, sir.
Yeah. So if it is moving above 52-week high here, so what will happen? A normal person is bound to sell. He will not even think of buying. But we need to understand this is a big consolidation which has happened over a number of years. And when a stock is actually coming out of that consolidation of number of years, it warrants a buy, not a sell. So what happens is the people who follow 52-week high, 52-week low, they'll be selling over here and actually missing out on the massive run which is likely to occur afterwards. And the stock, you might be surprised, will be in 4 digits immediately. And you will regret that you just got 20, 30 rupees. But that 20, 30 rupees looks good in a sideways market, in a consolidating market. but not in a trending market. So in technical analysis, I think majority of you might be knowing, there is a beautiful saying, and all of you must know this, and that saying is, trend is my friend. Be with the trend. So this is the saying which we have in technical analysis. Trend is my friend, be with the trend. It means if the stock is in an uptrend, it will continue to remain in an uptrend. Till what time? Till the trend reverses. So this is what we always need to keep at the back of our mind, that 52-week high-low theory always gives you good results in a sideways market, where if the stock itself is moving in a range of 20%, 30%, there you get a good entry and exit. But when you are having trending market beautifully, it's trending upwards, then you have to concentrate on the breakouts and understand what pattern has occurred. This itself will be such a big pattern, and if the number of years are more, the bada trading tha, then trust me, it can be giving you a multi-bagger sort of a return, and that too in a very short span of time. So this is what is happening with a lot of people, and they actually miss out. So Dr. Bhatt, it's my request that whenever you are discussing or in your group stocks and everything, just make sure that people pay attention to that also, that how much consolidation has occurred in the stock, and then to buy. Secondly, this is one question. I think this is normally what people ask. Second question is, people who want to buy, supposing breakout aa gaya, and we have seen after the breakout, the stock has gone up dramatically. It has gone up sharply around 15-20%, and we are very scared to enter at that time because the stock has gone up so much. So what should be done? ऐसा question आता है किसी को that we want to buy, but it has gone up so much in the short span of time, we are feeling scared of buying? You get the questions anytime, Dr. Bhatt? You're on mute.
We do get this type of things in mind.
Yeah.
After a sharp rise, what to do, and then FOMO feeling comes in the mind.
Correct. FOMO feeling is always there, and that is what drives the market.
Yeah.
Nice to hear such slangs from you, Dr. Bhatt. So anyway, so what happens is that FOMO feeling should not affect your decision making time process. So what can be done? A simple thing which you can follow. This is a very simple theory which you can follow. It is
Either you
called
should wait for some retracement to happen.
exactly, very good, Dr. Bhatt. It is exactly, we should wait for that retracement to come into place. Whenever a stock is moving up sharply, please understand it is not going to move up vertically. There are exceptional stocks, but it is okay if you don't get entry into such stocks, because the downside also will be such. But if you want to get an entry, wait for a retracement. Now, many times the stock corrects also. Let us say stock went up and it went up, let us say from here. It has gone up here. It has gone up almost, it is at 350 rupees. Now you want to enter the stock, but you cannot enter the stock because you feel that the price is too high. Even though you are aware this is going to give you good returns. Then always there will be a minor retracement, and then the stock will continue to rise. And that is the time you enter again. Now, how will you enter here? I mean, catching the bottom is not possible at all. So there is a saying in technicals that only the fools try to catch the bottom. So possible nahi hai, even though we are having a retest of this. There is a technique, okay, in by which a very, very simple technique which I usually follow is I usually look out for 20 days moving average as a support if the trend is very strong. Whenever we have a small retracement towards the 20 days moving average, and that 20 days moving average is coinciding with either 23.6 or 38.2% retracement, then I get a good entry point over here. This is the entry point which I actually want, and I get it. if 20 days is here, 20 days moving average, and besides 20 days moving average, there is a support, let us say, coming in. Maybe retracement level 38.2. So those conditions, if they are meeting at nearly the same point or there is a confluence zone, then that is a good entry point. Besides this, you can always use or take help of candlestick patterns. Now, candlestick pattern, you might say, sir, there are so many candlestick patterns. How will we determine which candlestick pattern is strong? Then always remember there are primary patterns which are extremely strong or which have better results. Like possibly you can say single day reversal patterns like hammer, or maybe 2-day reversal patterns like bullish engulfing, or even a bullish harami with a confirmation, or even a 3-day reversal pattern like a morning star. If such patterns are occurring at the bottom, it's a clear-cut sign that you should be entering. You did not wait for anything there. You should not wait for anything there. So once again, if you are feeling FOMO effect, fear of losing out, then you wait for a dip to come. 20 days moving average के पास अगर there is a bullish candlestick formation on weekly time frame, that is much better. Daily time frame will do. Especially you have this pattern of single day reversal pattern like hammer or bullish engulfing or harami with a confirmation or even the morning star. So this can be a good entry point if at all you. I think that is what the theory. I just wanted to, answer. I mean, the questions which are, put to me. These are normal questions now. Obviously, the questions remain कि क्या लेना है, क्या लगता है. These are two common questions. Right, Dr. Bhatt? Wherever we go, the same questions are asked.
Yes, sir.
શું લેવાનું અને શું લાગે છે?
શું લાગે છે? Yes, sir.
લાગે છે ને શું? આ જ બે questions હોય. This is
Yes, sir.
common to me. And I think you also must have experienced a lot of times.
Yes, yes. પાર્ટી માં જઈએ તો આ ક્વેશ્ચન પૂછે લોકો.
હા હા, અરે પાર્ટી શું પ્રાર્થના સભામાં આ જ પૂછે છે. So anyway, we are coming to that only. So before I